I'm Adrian Manz, and it is time to review the first quarter of 2012 results for the intraday trading plan. As always, the only results I'm going to talk about here are the around the horn results. That's the first section of the trading plan. Trading plan, of course, is divided into three sections: around the horn, stocks to watch, and stocks and sectors on the radar. The around the horn portion is the easiest component to replicate since it has all of the entries, stops, exits. Everything is pre-planned, and replicating it then much easier than trying to duplicate what's going on with stocks to watch, stocks and sectors on the radar. If you want to see how those added to the bottom line following the rules, go to traderinsight.com, click on blog at the top of the page, and you can see the impact of the additional trades. That being said, we see that we had a pattern distribution that was dominated by reversal setups, and the infield fly setup in particular, 81 times that one presented versus 66 times on the fastball continuation. So the fastball expansion of range and volume showed up 66 times, infield fly 81, line drive 18, 3-2 pitch 3 times, backdoor slider 10, switch hitter 59, double header 15, and sinker 8 times. Now if we look at the number of triggers on these, the numbers start to come a little bit closer together. We see that fastball triggered 36 times versus 55 triggers in infield fly, 13 line drives, 3 3-2 pitch, 5 backdoor slider, switch hitter 33 times, and doubleheader 10, sinker 3. When it comes to profitability, however, we see that fastball, the expansion of range and volume setup, of course, wound up generating the lion's share of the profits. So only 36 triggers on that one versus 55 for infield fly, yet fastball generated 5.25 points per share versus $1.25 roughly for infield fly. Line drive just sort of negligibly negative, down 3 cents on the pattern. 44 cents for 3-2 pitch. Backdoor slider 21 cents. Switch hitter $3.32. Down 28 cents on doubleheader and down 56 cents on sinker. That's really nothing to be concerned about at this point. They didn't really present enough times to provide meaningful data. Now, what's all this mean in terms of overall profitability? Well, we had 65 winners, 34 losers, and 36 scratch stops. So it's been a rough market. Really had to stay on top of the trades and make sure you were executing them exactly by the trading plan. If you did all that, however, you grossed $9.28 per share for January, February, and March of 2012, trading only that first section of the trading plan called the around the horn trades. So that's great. $9.28. A little lean compared to the 4+ points that we typically do in a month. But by the end of the year, this is probably going to average out, and we'll see those numbers shape up a little bit. Didn't have a whole lot of triggers in the month of March, so not a whole lot of quality triggers anyways. Lots of choppy sort of grinding markets in March, and that is then the net result. But $9.28 a share, so if your trading size is 1,000 shares in a $100,000 trading account, $9,280, 9.28%, and then just make the adjustments. 500 share trading size in a $50,000 account or a $25,000 account. Pretty easy to figure out what those results then look like in terms of percentage returned. Longs to short, 69 on the long side, 90 on the short side, and we see that the long side wound up generating more of the profits. So $6.76 on the long side versus $2.52 per share on the short side. Market keeps signaling a rollover, and of course we just don't get a rollover. But all in all, as long as we wind up on the right side of the P&L at the end of the day, there's nothing to complain about. So if you have any questions, send me an email, adrian@traderinsight.com. That's questions about anything, how to use the service, trading questions in general. Always happy to answer them. I hope that you've all had a very good first quarter and that it turns out to be just a great year for everyone. Thank you for listening.